Hi guys, it's Stock Curry and welcome back. It has been a crazy couple of days in the market. I've got to get you caught up with what's going on in the stock market, including what the Fed's been up to, and I've got a major update on cryptocurrencies. So let's get into it. All right, let's start with what Jerome Powell has been up to, because what's happening at the Federal Reserve is getting a little bit interesting. Today, Fed Chair Jerome Powell gave testimony to Congress, and he said a couple of really interesting things. One of the things he said was that the Fed is not doing its job and that the Federal Reserve needs to get its house in order. He also said that higher interest rates could cause a recession, and he said a 100 basis point rate hike, that is a 1% rate hike, was not off the table. So in other words, Jerome Powell was saying that the Fed is not doing its job. It needs to get more aggressive or more hawkish in order to get inflation down. And as a result, they might end up putting the economy into a recession. They might do a 100 basis point rate hike, a 1% rate hike. It is incredible. Keep in mind that the 75 basis point rate hike, 0.75%, was the largest rate hike since 1994. If they do a 1% rate hike, we're going all the way back to Paul Volcker years at that point. And Jerome Powell was very clear today. He did not want to be compared to Paul Volcker, but at this point, the comparisons are there. You know, Paul Volcker, back in his time, was doing very small rate hikes, and inflation continued to go higher, and people were really losing faith in the Fed. And Paul Volcker had to do these massive, aggressive, immediate rate hikes in order to get inflation down. And it's seeming more and more likely like Jerome Powell is going to have to do the same thing. Now, all of that said, there is a limit to what Jerome Powell can do. The Fed is limited to what's called monetary policy, meaning they can only do things monetarily, such as raising interest rates or buying and selling bonds. They actually have a very limited toolbox when it comes to these things. So Jerome Powell has already said on multiple occasions that the Fed, being limited in what they can do, they cannot bring inflation down. He's flat out said that. There are just certain things that are outside the Fed's control. The Fed cannot bring down food prices. The Fed cannot bring down oil prices. There's just some things the Fed cannot bring down. And part of the reason is because the Fed has the ability to lower demand by increasing interest rates. But for those things where demand cannot be lowered, I mean, people have to drive to work, people have to buy food, the Fed is extremely limited. In those cases, you've got to get supply up. And unfortunately, supply chain issues are there, and they continue to be terrible. This is where the Fed essentially said to Congress today, look, you've got to enact fiscal policy. That's the only way to bring inflation down. Now, fiscal policy is a couple of different things, right? There's some talk about Joe Biden, our U.S. president, talking about removing the federal tax on gas. Now, initially, this sounds like a great thing. I mean, it's going to lower gas prices, right? Well, unfortunately, it's a mere 18 cents a gallon. I don't think anybody going to the pump is going to feel that much better about paying $5.11 instead of $5.29. There's just not that big of a difference there to have a real meaningful impact on any individual. But removing the federal tax on gas does have a meaningful impact on the U.S. government, because the U.S. government is now removing a very large portion of their income. Now, they're not cutting expenses, which means they're increasing their deficit. And how does the federal government overcome a deficit? Well, they have to do one of two things. Either they have to go borrow money through these U.S. treasuries, and essentially by borrowing money, what they're doing is they're printing money that has to be paid back later at a higher interest rate. So the Congress goal by getting rid of the federal tax on gas is not going to help inflation. All it's going to do is actually make inflation worse, because the Fed essentially is going to have to, or not the Fed, but the Congress and Treasury Department are essentially going to have to print more money in order to overcome the deficit from the loss of the gas tax. Essentially making the whole situation worse, because That's how we got in this situation in the first place, was by printing money. So not a very good idea. In fact, it's flat out stupid, but this is what they're doing. And a lot of this has to do with the fact that, look, mid-year election is coming up. The midterms are coming up in November. We're only a few months away. And Democrats have got to do everything in their power to get on people's good side, to maintain control in Congress. Because the big problem right now is with the economy in shambles, with inflation sky high, everybody is suffering. And everybody's going to blame whoever happens to be in control at this time, which right now is Democrats. So they're going to blame Democrats. They're going to go vote Republican. Democrats realize this. So they need to do things politically to try to raise their chances of winning re-election. So this is kind of the situation we're in. So we're probably through November going to see a whole bunch of this hocus pocus bullcrap where policy makers, Congress, Joe Biden, etc., are enacting things that sound good on paper but don't have a real meaningful impact. Or at the very least, they have a meaningful impact, but it's extremely short term and it's not long lasting. Now, all of that said, I'm not going to get into politics. My only point is Congress and Joe Biden are not doing enough to actually bring inflation down. The Fed is not doing enough to bring inflation down. And I think the Congress testimony today that Jerome Powell gave made it very clear that neither Congress nor the Fed is doing enough to bring inflation down. And this is going to cause further problems and further increases in inflation. Now, all of that said, what about the supply chain? Obviously, Jerome Powell is working on getting demand down by increasing interest rates. What about the supply side? Is that getting any better? Well, the world's largest truck maker says it is facing enormous supply chain pressure. Specifically, there is a massive shortage in parts, which is slowing down the production of its vehicles. One industry veteran said this is the worst he's seen in 25 years. And of course, inflationary pressures are weighing as well, as that's going to cut profits because it increases the cost of energy and raw materials. Now, that's the bad side, is that we still have real supply chain issues. The good side is the price of oil and the U.S. Treasury yields are actually coming down. Now, this is a really good thing because we really don't have a lot of control over the price of oil. In fact, the United States has very little control over the price of oil. And really, the price of oil is governed by the war in Ukraine, Russia, OPEC, all these sorts of things. The good news is that the price of oil is coming down. Now, with the price of oil coming down, this is causing bond traders to think, you know what? Maybe if oil comes down, that's going to kind of fix inflation and we're not going to need as many rate hikes. So now we see 10-year Treasury yields coming down as well. Now, normally, when the oil prices and the Treasury yields go down, that will cause a rise in the stock market, especially the NASDAQ or the QQQ ETF. We're not seeing that though. And part of the reason is the Fed remains very hawkish. And it looks like they might become even more hawkish. This is causing a tremendous downward pressure on the stock market. While lower oil prices and lower bond yields are causing upward pressure on the stock market. And I think that's one of the reasons we saw the stock market say it just traded so flat on Wednesday, was because there's this fight between concerns over the Fed and the good news that's actually happening in the real economy. So it'll be very interesting to see which one of those win out. I think as the Fed starts to talk less, the lower oil prices and the lower bond yields will actually win out and cause the market to go up in the short term. That's my prediction, my belief. So that's basically what I'm trading on. I'm very short-term bullish while I remain long-term bearish. That's the large recap of the stock market. I did want to let you know about one trade I made today. On Tuesday, I bought a Tesla put option near the top of the market for $14.70. And then I sold that on Wednesday near the open for $18.10. Overall, it was a 23% overnight profit. So I just wanted to show that to you that you can make money even if the stock market trades flat. There is money to be made, and you can do it. You can make this kind of money too. If you want to make profits even when the stock market trades flat, come join us in the VIP Discord. In the VIP Discord, we are profiting day and night. I would love to have you come join us. I will coach you, show you how to trade options. I have options training courses in there as well. It's all included as part of the VIP package. If that's something that interests you and you want to join us and come make money even when the stock market trades flat so that you can make 23% profits in your portfolio also, then come join us in the VIP Discord. You can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Okay, now moving on to the cryptocurrency market, and boy oh boy is it bad. Bitcoin over the weekend fell below $17,000, well on its way to its next floor of $12,500. However, it did rebound, and I had put in the VIP Discord that I thought crypto, especially Bitcoin, would trade around the $19,500 level for a few weeks. And so far, it looks like it is, in fact, doing that. It's trading right around that $19,500 level. I mean, give or take $1,000. I mean, Bitcoin's very, very volatile. And the reason for that is just what happened the last time it hit a major support level at 22,500. It traded around that level for a few weeks before dropping down. Now it seems to be trading around that $19,500 level, but I do believe that eventually it will drop down to that $12,500 level, which, by the way, is major, major support on Bitcoin. Once it hits 12,500, I don't know if it will actually fall further than that. That might be the bottom. I'll reevaluate when we get there, but for now, I still think Bitcoin's going to drop to 12,500. Now, what about all the other cryptocurrencies? Well, the big ones, Ethereum, Cardano, Solana, they're all following along with Bitcoin. Whatever Bitcoin does, the others follow. Now, I do want to stress that there are a huge number of cryptocurrencies out there. I can't remember the number. I think it's like 18,000 cryptocurrencies, something, maybe more or less. But whatever it is, there's a huge, huge number. And I want to stress that 80 to 90% or more of those cryptocurrencies will be gone, non-existent, never to be heard from again within a few short years. This always happens, right? We saw it happen when automobiles were starting to become really big. There was like 80 car manufacturers in the US, and in the end, we ended up with like 10 that stuck around. So all the others went out of business. We saw this happen during the dot-com bubble, right? All these dot-com companies came out, and they were going up, and it was massive, and everything was great, and in the end, 60% of them went out of business. They were gone, delisted from the stock market, never to be heard from again. We are seeing that right now with electric car companies, right? Electric last mile, gone. I mean, they are bankrupt. They're going out of business, getting delisted. They're pretty much going to be gone from the stock market, and they're going to be gone forever. Another one that's struggling right now, who was Nikola Motors was another one, right? Ran up, and now they're having serious troubles. Even though they are actually producing vehicles, they are having a lot of troubles. So we're going to see a lot of electric car companies spring up and then disappear. And we're starting to see the same thing with cryptocurrencies. Now, the interesting thing about cryptocurrencies is not just the cryptocurrency coins. We also have to look at the exchanges. Because keep in mind, most of the exchanges offered very high yield interest rates if you staked cryptocurrency, and then the exchanges would take that money, they would trade it, make money off of it, and all this. Well, the problem is, as the price of cryptocurrencies fell, the exchanges that had bought into these cryptocurrencies lost a ton of money. We have already seen quote-unquote stablecoins get wiped out. We are now seeing cryptocurrency exchanges get wiped out. Celsius bit the dust last week. And it's not just Celsius that's having problems. I want to go over a few others. FTX, which is probably the strongest exchange out there right now, just lent a huge amount of money to Voyager Digital and BlockFi to try to save them from bankruptcy. FTX gave $500 million to Voyager Digital and $250 million to BlockFi. Now, what really makes this bad is the fact that exchanges are not FDIC insured. Meaning, if the exchange goes out of business or goes bankrupt, you lose all of your cryptocurrency on that exchange. It's very dangerous. Now, what this has caused is a run on the banks. Much like in 2008, when everybody thought the financial crisis was going to cause our entire banking system to collapse, there was a run on the banks where people ran out and pulled their money out of their banks. So much so, the banks literally ran out of cash. And the federal government had to step in and beg people to stop pulling their money out of the banks and remind them that their money is federally guaranteed by the US government so long as they had less than $100,000 deposited and they weren't going to lose their money. That's not true with cryptocurrencies. If Coinbase or BlockFi or Voyager Digital or Celsius go out of business, you lose all of your cryptocurrency on that exchange. This is really, really bad, and people realize this. And that is why people are pulling their money out of these exchanges, which in turn is causing the price of pretty much every cryptocurrency to fall drastically. And while all of these liquidity crunches are hurting other exchanges, Coinbase is having its own problems. Now, if you've been watching this channel for at least a year, you might recall how when Coinbase initially had its IPO, I stated that I would not be investing in Coinbase. And one of my main reasons was the issue with their pricing. Coinbase's fees were very, very high. And my main concern is that some other competitor was going to come in and offer much lower fees, which was going to cause people to leave Coinbase and switch to one of their competitors. That was my main reason for not investing. And now that has actually happened. Binance.us dropped their spot Bitcoin trading fees, meaning if you buy Bitcoin on Binance.us, you can buy it for free. There are no fees whatsoever. And this, of course, caused Coinbase shares to fall significantly. In fact, they were down almost 10% on Wednesday. So not only do we have major liquidity crunches, which are putting exchanges on the virtual brink of collapse, we also have fierce competition coming in as there are less and less people investing into cryptocurrencies, and exchanges are doing anything they can to try to gain customers. Now, this is great for you and I who buy cryptocurrencies because we're going to end up with lower and lower fees. We're going to end up with smaller and smaller bid-ask spreads, and we're going to end up with more and more features. It is great for cryptocurrency traders. It's terrible for exchanges who are already suffering, already losing money, and now trying to enter a huge competitive battle. It's pretty much guaranteed at this point. Quite a few exchanges will go out of business. Now, I do believe that some of those exchanges will get bought up. For example, I have no doubt that if BlockFi or Voyager Digital were to go bankrupt, that FTX would buy them. I have no doubt about this because FTX is a major lender. They're literally propping up these two companies right now. So I'm pretty confident that Binance.us and Voyager Digital would get bought up by FTX. However, all of those customers would move over to FTX, and then Voyager Digital and BlockFi would cease to exist. And this happens in mergers and acquisitions all the time. In this case, it'd probably be more of an acquisition. So this is what's happening, is we're losing exchanges. They're going to go away, either through acquisition, merger, or bankruptcy. They're going to disappear, and we're going to be left with a few very large, stable, strong financial exchanges, which is good. It's great for you and I. It reduces a lot of the risk. It's going to end up increasing competition, lowering fees. All of this is really, really great. But we got to get through the pain before we can get to the benefits. And I just wanted to discuss the technicals of the stock market real fast. I'm not going to show you any screens because it's real simple. They're neutral. There are some technicals that are bearish. There's some technicals that are bullish. The market literally has no clear direction right now. It is impossible to look at the technicals and know what direction the stock market is trading. So unfortunately, I can't help you guys out there. I don't even know. I've got some bearish positions. I got some bullish positions. I'll make money either way, but I have no idea which way it's going to trade right now. We're just waiting and seeing. Alright guys, I hope you enjoyed the video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.